Hello friends, if you own your home, I need you to stay with me until the end of this video, because what I'm about to share could save you hundreds, and in some cases thousands of dollars every single year. I'm talking about major recurring bills that you are paying right now to your county, your city, and your school district that you legally don't have to pay at all once you reach a certain age. A huge number of older Americans are overpaying their government year after year on bills they qualify to have reduced, frozen, or completely wiped out. This is not because they did anything wrong, just because nobody at the county office is ever going to call them up and explain how it works. The exemptions are sitting there, the forms are waiting, and every year that goes by without filing is another year of writing checks for money that should have stayed in your pocket. I went through state tax codes, county assessor rules, and everything that changed for 2026, and I found 5 specific bills that millions of senior homeowners are paying right now when they legally do not have to. I will walk through each one, tell you exactly who qualifies, what the numbers look like, and what to do about it. Stay until the end because number 5 is the one almost nobody talks about. And for any homeowner living on a fixed income, it could be the biggest of all. Before we go further, consider subscribing and turning on notifications because you don't want to miss this critical information. The rules around senior exemptions, property tax relief, and homeowner programs change from year to year. Income limits are adjusted, new programs open up, older ones are updated, and application deadlines pass quietly without much public notice. Let's get into it. Bill number 1 is your general property tax. Each year, your county sends you a tax bill based on what they have assessed your home to be worth, and most senior homeowners simply pay it. They look at the number, they may grumble, they write the check, and they move on. What many do not realize is that nearly every state in the country has what is called a senior homestead exemption. It is a provision in state law that reduces the taxable value of your home once you reach a certain age, usually 65, and in some states 62 or 61. If your home is assessed at $200,000 and your state offers a $50,000 senior homestead exemption, you are only taxed on $150,000 of value. That difference adds up each year. Depending on where you live, the savings can range from $500 to $2,000 annually for as long as you own the home. In Florida, the additional senior homestead can be up to $50,000 on top of the standard homestead exemption, all homeowners already receive. In Texas, seniors 65 and older qualify for an extra $10,000 exemption on the school portion of their property taxes. In South Carolina, the homestead exemption removes the first $50,000 of your home's value from taxation for school operating purposes. In Alabama, homeowners 65 and older with certain income levels can be fully exempt from the state portion of property tax. In Georgia, the standard homestead exemption for seniors 65 and older can remove an additional amount from the assessed value of the home for county and school purposes, and in some counties, the figure is significantly higher. In Mississippi, homeowners 65 and older are exempt from ad valorem taxes on the first $75,000 of the true value of their home. In New York, the basic star exemption is available to most homeowners regardless of age, but seniors who qualify for the enhanced version receive a larger reduction. In Louisiana, special assessment level allows qualifying homeowners 65 and older to freeze the assessed value of their home, separate from any homestead exemption already in place. The names of these programs vary, and the dollar amounts differ widely from one state to the next, but the underlying idea is consistent. State legislatures have written specific provisions into the tax code for senior homeowners, and those provisions are sitting unused in millions of cases simply because the homeowner never submitted the form. Over a long period of ownership, the cumulative savings are substantial, but you have to apply for it. The county assessor will not pull your file the year you turn 65 and apply the senior exemption on your behalf. They will continue billing you the same way unless you submit the form. The form itself is usually short, 1 page, sometimes 2. You bring proof of age, proof of residence in the home, and proof of income if the program is income-based. Some states require you to apply once and the exemption stays in place. Others require renewal every few years. Either way, the effort involved is minimal. To find out what is available in your area, search your county name along with the words Senior Homestead Exemption, or call your county assessor's office directly and ask. One phone call is usually all it takes to begin saving for as long as you live in that home. Bill number 2 is your school district tax. In most states, the school portion of your property tax bill is the single largest part of what you pay each year, often 40, 50, sometimes 60% of your total annual property tax bill going to fund the local schools. If your children are grown or your grandchildren do not live in your district, You are still paying the same school tax as a family with 3 children riding the bus every morning. Many states offer a separate school tax exemption for seniors that works on top of, or in some cases in place of, the regular homestead exemption. In New York, the program is called the Enhanced Star Exemption, and for seniors 65 and older, with incomes under about $107,000, it can reduce the school portion of the bill by thousands of dollars each year. In Georgia, counties such as Fulton, Cobb, and Gwinnett fully exempt qualifying senior homeowners from school taxes once they reach a certain age. In Texas, in addition to the $10,000 school tax exemption already mentioned, the school tax amount is frozen the year you turn 65 and file the correct paperwork, so it cannot rise even when surrounding properties are reassessed upward. In South Carolina, the $50,000 homestead applies directly to school operating taxes. The program exists in some form in most parts of the country, but the rules differ by state and by county. You will not find it unless you go looking for it. Call your county tax office and ask directly what school tax relief is available for senior homeowners in your district. That single question can change what you pay each year for the rest of your time in that home. Bill number 3 is the year-over-year increase in your property tax, sometimes called assessment creep. Even with the senior homestead exemption in place, your property tax bill can keep rising because the assessed value of your home continues to climb on paper. In active real estate markets, senior homeowners on fixed incomes have seen assessment increases of 10, 15, even 20% in a single year. That can add hundreds of dollars to an annual bill, and Social Security does not adjust to cover it. Many states offer what is called a senior property tax freeze, also known as a senior valuation freeze or a senior assessment freeze. Once you qualify, the taxable value of your home is locked in at whatever it was the year you applied. Even if a neighboring home sells for a high price and the whole street is reassessed upward, your taxable value does not move. Illinois has the Senior Citizens Assessment Freeze homestead exemption for homeowners 65 and older under a certain household income limit. Oklahoma has a senior valuation limitation for those 65 and older with incomes below a set threshold. New Mexico has a similar valuation freeze. Arizona has the Senior Property Valuation Protection Program. Texas freezes the school tax portion automatically when you turn 65 and file the correct exemption form. Connecticut has a local option senior tax freeze that individual municipalities can adopt, and many have. New Jersey's senior freeze, mentioned a moment ago, functions as a reimbursement program rather than a true freeze on the assessment itself, but the financial result for the homeowner is similar. The taxes you pay above the base year amount are returned to you. In Washington state, qualifying seniors can have the value of their home frozen for tax purposes through the Senior Citizen and Disabled Persons Exemption Program, separate from the deferral program. The point worth understanding is that the freeze is not a discount you take once and forget. It is a long-term protection that compounds over time. A home assessed at $200,000 today may be assessed at $350,000 in 10 years if the local market continues to rise. Without the freeze, your tax bill rises with it. With the freeze, you continue paying tax on the $200,000 figure for the entire period. Income limits and specific rules vary from state to state, but the basic principle is the same. You lock in your assessment and protect yourself from future increases. Over 10 or 15 years of ownership, that protection can save tens of thousands of dollars. You have to apply, and deadlines are usually strict, often by the 31st of March or the 1st of April, depending on the state. If you miss that window, you wait another full year before you can lock it in. If you have not done this yet, it should be among the first calls you make. Contact your county assessor, ask whether a senior assessment freeze exists in your state, and confirm exactly when the application is due. Bill number 4 involves the smaller charges that appear on your county and city bills each month. That includes your water bill, your sewer charge, your trash collection fee, your stormwater fee, and in some places, a separate fire district fee or sanitation district charge. Individually, they sound small, $20 here, $30 there. Over the course of a year, they add up to $500, $600, sometimes $800 in fees paid directly to county and city departments. Many counties and municipalities across the country offer reduced rates or full exemptions on these utility charges for senior residents. In some cities, if you are 65 or older and your income falls under a certain limit, the water department will cut your monthly bill by 25 or 50%. Some counties waive the trash collection fee for low-income senior homeowners. Some places offer stormwater fee credits that remove the charge from your tax bill entirely. In several large cities, including Philadelphia, Atlanta, and parts of the Bay Area in California, the water department has a formal senior citizen discount program, with specific income thresholds published on the city website. In other cities, the discount exists but is not advertised, and you have to ask the customer service line directly to find out whether you qualify. Some counties bundle the trash collection fee directly into the property tax bill, which means a senior fee waiver on trash also has to be processed through the county tax office rather than a separate sanitation department. In rural areas, the local fire district or emergency services district may charge a flat annual fee that some districts will reduce for senior residents on application. None of these reductions are large on their own. A $10 reduction here, a $15 reduction there. Over 12 months, they add up, and over the remaining years you live in the home, the total becomes meaningful. The savings on any one of these alone are modest, but combined they can amount to $300 to $500 a year that you no longer have to pay. You have to apply. The water utility will not send you a letter the year you turn 65. Call your local water department and ask whether they have a senior discount or a low-income credit program. Then call your trash and sewer providers separately. Then check with your county for any other fee credit programs that may be available. It may take 3 or 4 phone calls, but each one can return real money to your monthly budget for as long as you live in that home. Bill number 5 is a program that receives very little public attention, and for senior homeowners who own their home but have limited cash flow, it can carry the largest financial benefit of any program in this video. It is called a property tax deferral program. If you are 65 or older, you own your home, and you are struggling to pay your annual property tax bill on a fixed income, several states allow you to defer your property taxes. The taxes are not eliminated, they are deferred. The state pays your property taxes on your behalf, places a lien on the home for the deferred amount, and the money is repaid when the home is eventually sold or the estate is settled. While you live in the home, you do not pay property taxes out of pocket. Oregon has a senior deferral program for homeowners 62 and older with incomes under a set limit. Washington State has a deferral program for seniors 61 and older. Texas has a property tax deferral affidavit that any homeowner 65 or older can file, which postpones all property taxes for as long as you live in the home. Massachusetts has a senior tax deferral option. Colorado has one. Michigan has a hardship deferral. Idaho has a property tax deferral program for homeowners 65 and older with incomes under a published limit, with the deferred amount becoming a lien on the property. Minnesota has the Senior Citizens Property Tax Deferral Program, which limits the annual amount a qualifying senior pays in property tax to 3% of household income, with the remainder deferred until the home is sold or transferred. Wisconsin has a property tax deferral loan program administered through the Wisconsin Housing and Economic Development Authority for homeowners 65 and older. California has the Property Tax Postponement Program for seniors and qualifying disabled homeowners, administered by the State Controller's Office. The eligibility rules, income limits, and interest rates differ across each of these states, but the structure is broadly the same. The state covers your property tax bill in the present, records a claim against the home, and recovers the amount later from the sale or estate. Interest rates on the deferred amount are usually low, in some cases capped by law at 3 or 4% a year, well below what any credit card or home loan would charge. For seniors who are watching every dollar in their budget but want to remain in the home they have lived in for 30 or 40 years, this program can preserve their ability to stay there. It can free up $2, $3, sometimes $500 a month that would otherwise go to taxes, money that can then go toward food, medicine, utilities, or general financial stability. Counties have little reason to publicize the program. Every dollar deferred is a dollar they have to wait years to collect. You have to know it exists and ask. Call your state Department of Revenue or your county treasurer and ask directly whether a senior property tax deferral program is available in your state and how to apply. To recap, there are 5 bills. The general property tax, which a senior homestead exemption can reduce in nearly every state. The school district tax, which separates senior exemptions in many places, can reduce or remove entirely. The yearly assessment increases, which a senior property tax freeze can stop. The water, sewer, and trash fees, which many local utilities will reduce or waive for senior residents. And the property tax bill itself, which some states will allow you to defer for as long as you live in the home. None of these programs will come to you. Counties do not knock on doors. Assessors do not send birthday letters when you turn 65. You have to know the programs are there, pick up the phone, and take the step to claim them. That step is the only thing standing between you and the savings. A few practical points worth keeping in mind as you make these calls. Have your most recent property tax bill in front of you when you contact the assessor, because they will often ask for the parcel number or the account number on the bill. Have a copy of your driver's license or state identification ready as proof of age. If the program is income-based, have your most recent tax return or Social Security statement available, since they will usually ask for an income